Hey, welcome everyone. I know we have a lot of European clients that were interested in, of course, the Person Algo Optimizer. And phenomenal news is that we only had so many licenses of this product, and through the year we have enhanced and made significant changes. They're just dynamic. I'll get into that another time. But what I wanted to talk about today is that being Thursday, a shortened week, we've got Coach K on the grilling stand. Coach K, of course, Brett Kavanaugh, the nominee for Supreme Court. We've had Twitter, Jack Dorsey trying to figure out, are they censoring information? And then, of course, Facebook in that line had questioning. And again, we've had the so many things going on with social media. It's crazy. But here, in essence, how this market's been behaving. We had some really great setups today, and coming into the room this morning, I just wanted to review these. The trigger was to be short, and almost got stopped out. You can see here's the entry, and I put these videos out to show you the Algo Optimizer, the mechanics, and what we've programmed and the reason. And I always show you guys that the blue line is the profit potential, and we have it set at a 2-lot base model. It gets out of the profit target, and then it's designed to trail. And in this case, you can see max bars. This model gets out at max bars. It went short again, and it didn't quite make the profit target. What did it do? It got out because why? It's now long too. It's reversed. And I like that because it's pretty crazy. In the trading room, we talked about an Arthur Merrill M11W pattern, which states that the secondary number 2 point can be slightly lower than the number 1 point. That's an Arthur Merrill. It's a long study. It's different classification of double tops and double bottoms. We call a double bottom a W because it looks like a W. And so what happens typically is that the market will go down and take out the number 1 point by a few ticks. It's exactly what it did. Look at, while we made a newer low, look at the person volume indicator. It made a significantly higher low. So this is part of the VIP person volume indicator. And for those that have it, don't forget, tonight, at 7:30, we're having our PUG meeting, person user group, to define better uses of this product and why it's just an incredible dynamic addition for any trader. Because sometimes you may miss these trades, and you can clearly see that, the product is long. Now, is this a retirement trade? No, but here is the key. Just like over here, it missed the profit target to get out, but it managed to get out with a slight tick or so profit. But yes, while it did give up some profits, the deal is it's been on the right side of the market, and that's what's helpful, right? So even if you're not trading it automatically, using it to say, well, I don't think the market can go any lower when it's in a short and trailing a stop, why the heck would you ever pick a bottom in here, right? If the conditions aren't ripe for a buy, don't pick bottoms. I mean, that's the age-old problem. People think a market can't go up any higher, and they sell, and they sell, and they sell, and they sell. And then finally, when the market does downtrend, they're not on it because they're out of money. Anyway, neither here nor there. What I'm looking for at this particular juncture is I'm looking for a little bit stronger follow-through on both the volume and the advanced decline analysis. That's what we're really looking for. You can clearly see this bar over here, which caused this area of what is a white line, which is a last conditional change, old support. This becomes a gray line, new resistance, and you can clearly see until we get over that, it's pretty much 79 3/4. We need a close greater than that, 79 3/4, and I think we're going to come right back up and more than likely get back into maybe the 85, 86 later in the afternoon. The catalyst would be a close greater than that line in the sand, and that should bring us back, minimum objective 86. What did I mean by the advanced decline? The advanced decline analysis, at least looking at the S&P 500, just the S&P 500, not the NYSE, nothing else, the S&P 500. We're like a neutral reading right now, where 245 of the S&P 500 stocks are positive, 250 are negative, 5 are unchanged, or 6, whatever the actual S&P number is. The advanced decline is not breaking down significantly. We came right to a major pivot support and a rising moving average. So at this point in time, we filled a gap in the market. This is all the information we have. We have a pullback and an ongoing uptrend. How do you sell short that, right? Do you look to buy the market? Yes, you look for a dip under the right circumstances. What are the circumstances? the advanced decline improves, volume improves, and you look for follow-through run in the market. What's the follow-through run? Once again, the follow-through would be breakout, and a follow-through breakout would be the market gaining not just higher highs and higher lows, because that's what defines an uptrend, right? But we want to see swing highs. We want to see the market close greater than past or prior resistance spots. And if that's the case, we would then get a what? A higher high. And so therefore, I'm happy with this trade. Obviously, it's long in the right spot. It's not a great profit, but it's doing the best that the market has to offer. And that's all I wanted to point out. Pug Group today, tonight. If you did not get your invite, let me share one with you. So as a reminder, it's tonight, 7:30 p.m., not 8, not 9, 7:30 p.m. You're going to tradingtriggers.omnovia.com/trading. That's the link that you want to use, https://tradingtriggers.omnovia.com/trading. That's where you're going, and that's the Pug Group. So there'll be people in that room, and that's what we're looking to see if you wanted to join us and learn more about the Algo Optimizer and the person's trading lifetime package, which is pretty phenomenal stuff. It gives us relative strength. It gives us average true ranges, what the current range is, volume compared a volume today versus the a volume average that we use, pivots, the daily trend, buy signals, sell signals, high, low, closed dojis, everything you'd ever want to know about the market is contained in what we've created here in the Person Lifetime Package. By the way, while we take a dissection, if you want, as we are mid-session, coming into the final hour of the day, here's what the sector analysis looks like. We have aerospace, defense, utilities, industrials, some of the bonds, TLT. Here's an interesting one. North America technology software is up, barely, but it is up despite the entire software decline with Adobe, Salesforce, which is CRM. I'll show you that in a second. GLD's up, diamonds are up. Diamonds are up. The market's down, diamonds are up. That's the Dow Jones Industrial Average. Materials, steel sector, SLX is up a little bit today. Consumer staples, I sent a tweet out about a stock that we're actually in. It's called General Mills, GIS. I don't know if you looked at General Mills in a long time, but we bought in on this based on a buy setup on a weekly time frame, and I'll go through that in just a quick second. But General Mills, just to explain the tweet, what the heck was that all about? I mean, look, this, you want to talk about a non-performing stock against the overall market. General Mills is way up here. I mean, it obviously peaked out back in 2016. They loved it at 70. You know, this company makes Haagen-Dazs ice cream. I got at least 3 pounds of fat on me because of the darn ice cream. I mean, by the way, it's a buy one, get one free at your local grocery store, I think it is. Nothing like a coffee ice cream with the chocolate and the almond-covered ice cream bars. Haagen-Dazs, right? Who doesn't like a great Haagen-Dazs? Anyway, that's a General Mills product, as is dog food. If you're in, the healthy, I think nowadays with more people in pet ownership, right, you have all kinds of products. Blue Buffalo is the one label under General Mills. Blue Buffalo, you may not know that. It's besides cereals, I think everyone knows about Chex cereal and Fiber One and things of that nature. But I mean, General Mills, I think they're probably lacking some of their sales in yogurt. I mean, Yoplait, not a lot of people are into or eating as much yogurt. Yogurt was a big thing in the 70s and 80s, right? But Betty Crocker, that's under Biscuit, Gold Medal Flour, Pillsbury, that's Cheerios, Cinnamon Toast Crunch, one of my grandkids' favorite right there, Cinnamon Toast Crunch. Want them to sit down and behave? Feed them some Cinnamon Toast Crunch. Watch what happens 15 minutes later when the sugar buzz kicks in. It's like a double latte with an espresso shot of Starbucks, right? Wheaties, Tricks are not for kids. Tricks are for investors who like General Mills. And then finally, back to school sick chicken noodle soup, Progresso. General Mills is the parent company of Progresso soup. So could this market break out and perform a little bit better than just 46 bucks? And that's what we're kind of looking at, and I'll show you why. Not because they have a great product line or list, but let's take a look at the weekly analysis. First and foremost, you can kind of clearly see how my volume indicator looks a little more impressive than on balance volume. Here the market has made the volume levels don't look that impressive. It almost looks like it's detrending. But look at this volume indicator. Wow, something looks a little bit more positive with this, and that's the reason why we are entered into a long position. So, and while it hasn't gone anywhere, and dramatically, if it goes up to 50 bucks and tests back up to this area right in there, odds favor as a swing trader, I'll be long gone out of this trade up into there. As a kind of a longer term trade, I think once we break out of that 50, then we could see maybe a retest of 58, 59, something like that. We are starting to see some of the staple food groups like your Hormel broke out. This is one thing that we've identified as a weekly high close doji. We actually traded this, made some money on it. We exited the trade over the last few weeks. Rather than going back into Hormel, we went into General Mills. So the idea is back into staples, consumer food group staples. What did we like about Hormel? Well, if you went to college and you were a guy, maybe you had, nothing like a great meal than Hormel chili in a can with a beer and some maybe premium saltine crackers, right? And that's, I'm not sure they make other things like, I think, Spam, but Hormel chili in a can. Who would have thunk this stock performing better than Facebook? And that leads me to my next market update, Facebook. Facebook, I put out a tweet today that between one double nickel, that's 155, between 155 and the 162 number, we have strong support. So here we have an area, if you liked the big story over the summer when it was trading at 200, 201, in this area in here, you go back, you hear about before the incredibly bearish earnings report, and of course, everyone was saying the only place to be for marketing ad dollars was Facebook. Well, if you liked it at 200, 211, you're going to love it at 162. Or is that a margin call for a hedge fund liquidation that they were overexposed to tech? I'm not sure, but my momentum indicator is starting to show a pretty decent convergence pattern, meaning price went down, and it's not going down on heavy momentum. So therefore, it's the selling pressure is drying up. Look at the volume. And again, you'd say, well, what volume? It's not really declined. It's not below the zero line. It's actually, the volume levels are actually converging as well. And that's the point. This is actually at a price level not seen since, again, July of 2017. We did get a little mishap firing off, but down in here you saw some buying interest in the market. And again, if we are to move forward, then I think that this is a great support area. We have a pivot area, 155.12, and that's why I put out that number, 155 up to 162 is support. Credit put spreads digest this downside move. The momentum's drying up. If you're into selling option premium's pretty high right now. Just to give a look for you option traders, if you take a look at Facebook, the implied volatility going out to the, I don't know if anyone wants to sell 43 days worth of premium out there, but implied volatility is around 31%. The historic volatility is at 13. The 52-week historic is at 13. 52-week historic high is 80. Your 52-week implied volatility is 45 versus 13, so you're at the upper end of the range of implied volatility, which means you'll probably get more premium, receive more premium selling right now, so you're getting a better opportunity to sell the premium. And quite frankly, if you sell a 155, 150, or if you go down to like a 150.45 put spread in the next 43 days, you get a handsome payout. And especially if you think that you would want to own the stock going forward, I would employ put spreads, because buying the stock, you might get a little jockle down to 155 or scale in, buy a little bit if you're going to buy $10,000 worth of Facebook. buy like $2,500 right now, a quarter, and then scale in. What I like to do on scale-ins is buy a little. If it goes down where I intend it, which is 155, I buy a little more, and then when the stock proves itself, I add on, and when it gets back through my first foremost purchase, that's when I add on. And that way I don't get the best price, but I'm not picking a falling knife bottom, but I get the best average price, and that's my style of scaling in. I hope you enjoyed this little updated video, and I just wanted to review what the hell did I put out a buy on Facebook when everyone knows I don't use the product. Thanks, everybody. And, by the way, look forward to seeing you at the Pug Group tonight.